Today, I'm going to share my most effective scalping strategy, one that I've successfully used for many years. The best part? This strategy is not only proven, but also extensively back-tested. Based on my experience, having a simple and manageable strategy is crucial for success. And yes, this strategy works. A common problem many traders face is that they only partially understand a strategy, leading them to change it frequently. This lack of clarity results in unstructured trading, which can wipe out an entire trading account. So let's get started. For this simple and proven scalping trading strategy, we will use the RSI indicator, bullish and bearish engulfing patterns. These two trading concepts have been around for many years and are well proven. First, let's set up our trading chart. I use TradingView for this demonstration. Click on Indicators and search for RSI. Add it to your chart. For bullish and bearish engulfing patterns, go to Indicators again and search for engulfing candles. Now we have two powerful indicators ready to go. Here's how to use this strategy. Keep an eye on the RSI indicator for potential overbought or oversold conditions. Look for bullish and bearish engulfing patterns to confirm entry and exit points. By combining these indicators, you can make informed trading decisions and improve your scalping performance. Remember, the key to success is sticking to a simple, well-defined strategy. Let's break down exactly what this strategy entails. We will only enter trades, buy or sell, when both indicators give us the same signal. You can use this strategy on any time frame, but higher time frames often yield better trades. For this demonstration, I'll use the 15-minute chart. Now let's go over the trading signals from these two indicators, or better yet, these two trading confirmation tools. RSI indicator, overbought and oversold levels. We enter a buy trade when the RSI rises from below the 30 line and crosses it upwards. Sometimes you can enter a trade if the RSI just slightly crosses the 30 line. For a sell trade, we enter when the RSI crosses downwards from above the 70 line. This is known as being overbought. Bullish and bearish engulfing patterns, pattern identification. Here's a picture showing what these patterns look like. This is a bearish engulfing pattern, and this is a bullish engulfing pattern. We will use the engulfing indicator we added to our chart. We only enter trades when we see these red or green signals. By following these guidelines, we ensure that our trades are based on strong confirmed signals from both the RSI and the engulfing patterns. This combination helps increase the accuracy of our trades and can lead to more consistent profits. Let's dive into making a trade entry, focusing first on buy trade examples. Using the 15-minute time frame for this demonstration, identify the RSI signal. Look for the RSI to indicate oversold conditions. This happens when the RSI rises from below the 30 line and crosses upwards. Confirm with the engulfing pattern. Once we have the RSI signal, we look for a bullish engulfing pattern to confirm our buy entry. Here's how to execute the trade. Enter the trade when both the RSI and the engulfing pattern confirm the buy signal. RSI needs to cross the 30 line from down to up. For the exit, I recommend closing the trade when the RSI approaches the 70 line. This typically indicates overbought conditions, signaling a good point to exit the trade. Now let's apply the same process for sell trades. Identify the RSI signal. Look for the RSI to indicate overbought conditions. This occurs when the RSI crosses downwards from above the 70 line. Confirm with the engulfing pattern. Once we have the RSI signal, we look for a bearish engulfing pattern to confirm our sell entry. Important is you don't need to have a RSI crossover and directly on the same candle the engulfing. The engulfing can be 2 candles later. because there is no real chance to have always the same pattern as we wish. Now let me show you my next scalping strategy. This is my favorite strategy because it's simple and extremely effective. How does it work? Identify support and resistance. First, I search for key support and resistance levels on the chart. These are critical zones where price tends to reverse or stall. Look for patterns. I focus on specific patterns within these support and resistance zones, as shown in this chart. Trading the range. Here's how I trade the range. Buy trades. I place buy trades at the support, lower line. Sell trades. I place sell trades at the resistance, upper line. This approach allows me to capitalize on multiple trading opportunities within the defined range. That's all for today. I've shared my best scalping strategy with you. Remember, stick to this strategy and avoid mixing it with others for the best results. If you found this video helpful, please give it a like and subscribe to the channel for more strategies and trading videos in the future. Your support helps our channel grow and motivates us to create more great content for you. Thanks for watching and happy trading.